Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Wolfgang Wagner of Deutsche Bank, and we're going to talk about correspondent banking. And I talk to a lot of people in this industry, and this subject of the evolution of client relationships within the correspondent banking business comes up a lot. So I was looking for you to go into what are some of the key factors the industry needs to look at when developing partnerships.
Client relationships, not only in correspondent banking, but more broadly, are multifaceted. And so I think it's no surprise that it's a series of factors that actually does matter when choosing a correspondent banking partner. Typically, that would range from product and technological capabilities over customer service, would include broader relationship aspects and pricing to a certain extent, and many, many more. If you'd like to bring some structure into this complexity, then one good way of starting is to look into the existing industry research on a particular topic. And when you do so, then one very interesting finding is that no matter what region of the world you're looking into, among the top mentioned factors, there are three that are identical across the globe. Those three are the quality of customer service. And here it's interesting that this ranks significantly higher than pure product capabilities. The second most frequent mentioned is the commitment to long-term relationships. This is for sure true for wider transaction banking, but it also comes up specifically on correspondent banking very highly in those remarks that the clients make. The third element is the responsiveness of the client managers. And here I think this comes from the fact that there is fierce competition within the industry, not only within the correspondent banking provider space, but also with the financial institutions, customers of those providers, when it comes to their retail and corporate clients that they serve. And so naturally, if they have issues, requests, problems to solve for their retail or corporate customers and need, on the other hand, to solve that problem, their correspondent banking provider, they need a very responsive client manager to actually, be competitive in their own market and successful. So that kind of gives you an overview of what the status quo is of the industry research. When you look into the future a little bit more, then there's two aspects that I would like to highlight. The first one is that when we speak to our clients, we see a new theme, a new critical factor emerging that matters a lot to them. And this one is the ability of a correspondent banking provider to offer and to continue to offer the full product suite of correspondent banking and related products. Typically, this would span across payment execution in the major currencies, liquidity management, check business, trade finance, and related foreign exchange. The critical point here is that while this clearly emerges as an important factor for FI clients when selecting their correspondent banking provider, that in the market space there's actually a reducing number of providers who can deliver that. Some providers had gaps in their product offering before. Some others had to reduce their product offering over the last 1 or 2 years, for example, in the check space. So that is one future aspect to watch. The second theme that we are seeing is that there is an evolution in the way how correspondent banking providers and their FI customers are working together. And here, the key theme is it's moving away from a pure provider to client relationship to a real partnership as a very collaborative approach in working out solutions for the issues that we find out there in the marketplace.
So earlier in your answer, you mentioned competition in transaction banking, but you ended up talking about one of the other big buzzwords in transaction banking, which is collaboration. But how does collaboration really work in this industry?
Let me highlight one good example of what we are doing in Deutsche Bank as a new form of this collaboration. And this is the customer advisory board that we have established at Deutsche Bank. What we do here is that we invite a group of FI customers to those customer advisory board meetings, which are typically one-day workshops that follow a very specific format. For example, they are totally neutral. They are moderated by an outside moderator who is not part of Deutsche Bank. They are absolutely non-sales, non-marketing in nature, and they always have a very specific focus. For instance, the last one that we held focused on liquidity and balance sheet management. In those workshops, the Chatham House rules apply. That means all parties that we invite, including ourselves, of course, can make full use of the information that is coming out and brought to the table in those workshops. But outside of that meeting, no one is allowed to quote a particular bank's opinion or individual's opinion that was given in this meeting. The goal of this and of those meetings, I think, is very clear. That it's about collaborating with customers very, very closely in order to identify what are the key issues in the marketplace, and also collectively working on finding and developing the optimal solution for those. Those customer advisory board meetings, they don't go in isolation, but they go together with other activities in Deutsche Bank. For example, I would highlight the Transaction Bankers Forum, to which we invite our FI clients on a biannual basis, and also the DB University sessions, which we hold in many markets around the world very, very frequently. And those different activities, Customer Advisory Board, Transaction Bankers Forum, and DB University session, they all have a slightly different format to fit their specific purpose, but they have one goal always in common, and it is this deep and close collaboration with clients.
It seems like the key to collaboration is this constant communication that you've outlined.
It's this constant communication, and it's also this early on communication, so that not the provider tries to kind of come up with a good product idea anymore, brings it to the market and then tries to sell it, but it's early on, even when it comes to problem identification, work with the clients to see, out of this myriad of issues out there, what are the key problems that they want to be tackled, and work with them on a solution. So if you do this and you invest the time early on, it's much more likely that you come up with a solution that really fits the problem and that is really desired and liked by the clients for whom you design those solutions.
Excellent. Wolfgang, thank you very much.
Thank you.